The U.S. stock market headed into its Independence Day holiday with impressive fashion. We did hit all-time closing highs on the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite today. We also had a big update out of the Russell 2000 after yesterday's bullish intermediate confirmation signal. The futures hit 3,000 on the S&P 500 for the first time here just this afternoon. So a lot of bullishness out there. Of course, tomorrow markets are off for the holiday. Friday will be probably a lighter volume day, but we will have an unemployment number, so that does have the potential to have a little bit of volatility. As a reminder, there's no video here on Friday as David and I will both be out of town. So with all that out of the way, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's July 3rd, 2019. First of all, if you're new, make sure you go over to YouTube, click subscribe. While you're over there, check out our description area where you can sign up for our email distribution list. In addition to that, we're heavy users of Twitter. Make sure you're following me there. My handle is @BrandonVanZee. And thank you to everybody who clicks like and retweet for these Market Outlook related posts. Lastly, we do have a presence on Facebook. You're welcome to join us in the web address embedded in the logo in front of you. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us for those of you that are premium market scholars that are following along on your own charting package at home. As a reminder, we have over 25 different chart setups that are available for those of you that are premium members, and we'll use a handful of them during these presentations and another handful of them during our premium trading rooms that we teach throughout the day. But this particular chart is 4B, and this chart will allow us to see all four of the U.S. equity indices side by side by side. It allows us to also quickly see visually whether we have a bullish or bearish posture using the Market Forecast Technical Indicator. The Market Forecast Technical Indicator is found on the Thinkorswim platform and other TD Ameritrade related services. And it's that metric that you see down below here that has a green line, it's got a red line, it's got a blue line, we've even got a dotted orange line on there as well. And when we refer to the posture during these videos, we're referring to the intermediate term posture. So remember, there are different time periods depending upon who you are as a trader or investor that you're looking at, but specifically in this video, we're looking at an intermediate time period. So from that perspective, we continue to have bullish postures across the board. No surprise, right? Yesterday, when I was doing the video, I mentioned the same thing, and if we're hitting all-time highs just one day later, we're not going to shake those bullish postures. At some point, perhaps we'll get a little bit overheated, but even that we're not quite seeing yet. Remember that we tend to look at things like these overbought cluster signals like we saw back here in late April to help us along with whether we're getting to those overheated territories or not, and we're not hitting those quite yet in the current market run that we've been on. In fact, you know, for some of them they kind of look like breakouts. We could just be getting started quite possibly. You know, you look at the Dow Jones here and we just broke out of this prior resistance area. So who knows, maybe we've got a long run in front of us here this summer. We'll just have to see where the geopolitical news winds carry us. Of course, a lot of our market does rely upon you know, its expectation that China and the United States will resolve their trade war, but you know, that's always a wild card as well. You just never know when it might go the opposite direction. What we do know is that looking at the charts and not just, you know, predicting what should be happening because of what our thoughts or our opinions are, what is happening with our charts, we can see with our own two eyes, is we are hitting all-time highs. More times than not, all-time highs lead to further all-time highs. And so this is a bullish time period for the stock market itself. I mentioned in the intro that you'll recall last night I was referencing this bullish intermediate confirmation signal on the Russell 2000 as kind of a buy the dips mentality, as we had a rare drop in the Russell 2000 here yesterday. We did have a nice snapback here today. In fact, we gained back all of the losses on the Russell 2000 today as we were up 0.74% there. The NASDAQ was up 0.75%, S&P 500 was 0.77%, and the Dow Jones was up 0.67%. You'll notice that the S&P 500 is just a hair below 3,000 on the cash index here. It's at 2995. But if you were to type in /ES, notice right now, at least when I'm giving this presentation here a little bit after the market is closed, we're at 3,001 on the future. So we'll see if we can make it official to hit 3,000 on the cash index as soon as Friday when markets get opened yet again. Let's go ahead and take a look at our next chart setup, and this will be chart 4D. As a reminder, this particular chart setup is a longer term view towards the markets. This is what we call our 1040 crossover method. And as I mentioned yesterday, one thing that we're keeping our eye on right now that is kind of time sensitive is what's going on with the Russell 2000. So let me right click on this chart in the lower right hand corner and maximize that cell so that way we can see it a little bit better. But as mentioned yesterday, we are getting a bullish crossover using the 10-week moving average versus the 40-week moving average. In this case, the 10-week is represented by the orange line and the 40-week moving average is represented by the blue line. And you can see all the way over to the right-hand side here, we're just barely crossing. Remember, we do have this MACD 2 lines down below, so that way you can kind of fine-tune it a little bit better. And remember, when that black line is above the horizontal pink line or fuchsia line that you see down below, that means that there is a crossover taking place with those moving averages up above there. So again, need to stress that this is a weekly candle chart. And so the week isn't technically over. You know, there is the possibility that the stock market just craters on Friday in low volume if the jobs number is not what the market participants want. But assuming that doesn't happen, then there is a very good chance that the Russell 2000 will once again join the other indices with a golden cross on the 1040 crossover method using weekly charts. You can see these other charts did not give you the negative crossover that the Russell 2000 did here a little bit ago. So that was a sign of strength. There was resiliency in the large cap indices. They've stayed with bullish postures from this longer term view going all the way back to February in many cases. So anyway, be aware of that. Again, we're not going to be here on Friday to let you know one way or another. But again, if you are a premium market scholar, just go to chart 4D and that'll get you taken care of on Friday after the market close if you want to get a head start on that analysis. Otherwise, David should be back in the saddle on Monday, and he'll probably bring that up at that time as well. All right, let's go ahead and now take a look at our next chart setup. And let's go ahead and do chart 4E here. This will be our 12 grids where we're looking at intermarket analysis on this first set. And this will give us a good sense of whether we have bullish or bearish postures if you just look at the background colors of the charts. Green equals bullish intermediate posture, red equals bearish intermediate posture according to the market forecast technical indicator. All right, so as we look at this, I mentioned yesterday that the VIX was down 8% yesterday. It was a pretty big move lower on the VIX despite the stock market really not doing a whole lot. Today, it fell yet again. Again, not surprised there because the stock market was actually up more violently today. So if anything, those days might have been better off flip-flop there for the VIX. Today felt more like an 8% drop day than it did yesterday. And today was only down 2.7%, even though the stock market erupted higher to all-time highs. So it was a little bit peculiar from that perspective. One other thing that I'll point out, for those of you that are starting to kind of sniff around for reasons why we might need a reversion to the mean type of a move at some point, the VIX did have a bullish cluster signal, or in other words, an oversold cluster signal. Now remember, the VIX is very volatile, and that makes sense. It's the volatility index, but the index itself is quite volatile. And remember that when you have those types of scenarios, sometimes the cluster signals don't work quite as well. I can say that over here to the left, you'll notice that we have these little green dots showing up, and let me right click on this and maximize this so you guys can see this a little bit better. Remember, the cluster signals are when the green, the blue, and the red lines are in the lower reversal zone, or in other words, below 20 on the market forecast on the same day or the same candle. You could use these on weeklies as well. This is a daily candle chart, but you will see that we've received these bullish cluster signals here, or oversold cluster signals on the VIX back here in the middle of April. and then we were about ready to erupt higher. Now, it did kind of stall out for the next, let's call it 2 or 3 weeks before erupting higher, but nonetheless, that was getting to a point where the sellers in the VIX had kind of exhausted themselves, and we've got our first kind of set of those clusters right now, but there is no rule book when it comes to this. In other words, just because we got one oversold cluster right now does not mean that we can't get 10 in a row. You just got to be prepared for the possibility that charts don't do what you assume they will do because of any one given instrument. So that should go without stated. But just want to remind folks, technical analysis is not perfect, but it does help us, establish assumptions and helps us feel more confident in the trades that we are taking. Let's look at a few more charts over here on chart 4E. And point out a few things that are going on. Been mentioning the dollar lately, so the dollar remains below that falling moving average there, but note the background color of the chart remains green, and you can see here the intermediate line is at 32 and rising. So while we have a bullish posture there, the placement of the price candles below the falling moving average does lead me to be a little bit more hesitant there. Where I'm not as hesitant in terms of looking for breakouts and clear trends, that's the bond market right now. Notice here TLT broke out yet again here today, up another 0.71%. I mean, it's just been crazy to watch what's been going on with bonds. And mentioned that I didn't want to sound like a broken record yesterday when talking about the foreign bonds. Well, let me sound like a broken record again. Foreign bonds up yet again. Look at this chart, BNDX. It just keeps going. It seems like every single day BNDX goes up a little bit more. Now, you're looking at that and you're saying, well, that's not that much in percentage terms for, a move, is it? And it may not be, but for a bond market, that is a fairly sizable move that we've seen here recently. Another thing to be aware of, VNQ, over here on the right-hand side. Notice that VNQ tracks REITs, and it had another explosive day to the upside. So that has been really interesting for me to watch this week, because on Monday it felt like a lot of those interest rate sensitive securities were really struggling, and then the last 2 days they just had a rip your face off rally right back up, snapped right back into their uptrend. I mean, it was questionable a couple of days ago whether they would maintain it. You'll notice the pullback that we had in the REITs was strong enough where the moving average actually started going lower. That's why it started getting painted red right there. Well, just like that, we ripped higher here the last couple of days. Notice the moving average has turned back to green. So in other words, price is above a rising moving average once again. In fact, we'll talk about that here in a little bit when we get over to our sector analysis. But a lot of those defensive and interest rate sensitive areas of the market were actually the leaders of the market today. A lot of people would probably assume that this must have been a really big risk on day for all the markets to be hitting new all-time highs and all this excitement in the air. It was actually being led by a lot of defensive areas, so kind of interesting from that perspective. You'll see that ag commodities had a nice day. They were up 1.34% today. Remember, part of this coming together with China, some of the information that's emerged from that story here recently is that the United States is relaxing their terms with the Chinese firm Huawei, but in return, China is expected to be big purchasers of U.S. goods, especially agricultural-related products. And so it is possible that the ag commodities are getting a little bit of a push as a result of some of those talks that you hear thrown about in the news there. Also notice nice bounce out of the preferred stocks here today. Preferred stocks rallied right off of that rising moving average yesterday and continued on today. While we're not at new highs on preferred stocks, a solid bounce nonetheless. Note that the 10-year U.S. Treasury yield is closing today at 1.95, extremely low. In fact, one of the headlines that I saw crossing here recently was that the 30-year interest rate actually inverted with the Fed funds overnight rates, and that is maybe cause for concern down the road. Remember, inverted yield curves typically don't lead to a falling economy or a falling stock market immediately. Sometimes it can take years, but that's one of those things to keep on your radar as you go forward. It seems like Right now, it's a race to zero in the interest rate environment. In fact, many countries around the world, the race has gone below zero, and many of them have negative interest rates at this point. So, that's one of the things that the bears keep on talking about in terms of the market, but the market is disregarding that for right now, and the market keeps on going higher. All right, let's go ahead and take a look at our next chart setup. This will be chart 4F. These will be the foreign stock markets here. As you can see, we've got two pink charts on the board. One of them is Mexico that I mentioned yesterday. It didn't do much of anything today. It's just kind of riding its moving average lower. India is new as of today. Yesterday it was a green background chart. Today it's pink. So that's why we look at these charts as often as we do, because they will change whenever there's new days of trading that take place out there. India doesn't look terrible to me. In fact, I'm still a little bit optimistic that it's rising above that moving average right there, where hopefully it's establishing a new level of support at a higher level than where we found support in the past. But right now you do see that the intermediate line is at 70.64 and falling. And remember, when you're on these 12 grids, for those of you that are premium members, just right click on the chart, go to maximize sell. And then down below is where you're going to be able to see the actual market forecast indicator itself. Now, part of this depends upon the size of your monitor. We've gotten that question a few times in the past as well. Some people say, well, it's not there. Thinkorswim does some things behind the scenes to kind of adjust your chart to the size of your monitor. If you have a large monitor, you should be able to see this without any difficulty. But if you have a smaller monitor, it's possible that they won't be visually showing you the technical indicators that you actually do have loaded up. But anyway, when we look at EPI here, notice that the intermediate line is 70.64. And you look at this this green line over here on the market forecast in the lower right-hand corner, it looks more sideways to my eye, but technically there is just a slight tilt lower there. So I wouldn't make too much of this. Yes, technically it's considered to be a weekly bearish posture, but I actually look at this chart and I don't mind what I see. I don't think I'd be rushing for the exits if I had a position on India right now just as a result of that. As long as it stays above that moving average, I think more times than not it can kind of stabilize there. A couple of the areas that have been impressive to me here today specifically were Australia and Canada, kind of here in the middle of the charts here. Australia was one of those charts that I identified, several weeks ago as breaking out. I remember talking about both Russia and Australia at that time. It was probably during this time period right here where it was really starting to burst higher. This is EWA for Australia. But it did immediately give back a sizable chunk of those gains, tried to stabilize around that moving average, went on another big run, and today we do find ourselves at 3-month highs yet again on EWA. So that EWA. That appears to be one of the stronger trends on the board. Russia has been more consistent. It did not give back a big chunk of its rallies like Australia has. It's just been consistently plodding higher, but it was up another 0.76% today and remains with a bullish posture out there. So I would say that from my eyes perspective, those are your two leading areas of the market right now from an international perspective, Russia and Australia. And then Canada is starting to make some waves of its own there. And it's up about 3% over the last 3 months. But we are at 3-month highs, and we have a rising moving average and a few other features there that are attractive out of our neighbors to the north up in Canada. All right, let's go ahead and see what's going on here now in the United States as we head into our Independence Day here tomorrow. I do know that we have an international audience here on YouTube, but most of you probably still reside in the United States, I would say. And so we are going to be celebrating, and just like folks do all around the world for their patriotic holidays as well, we'll be celebrating here in the United States tomorrow. And so markets will be closed, but we go into it with really good vibes. Mentioned before, the S&P 500 is just within a stone's throw of 3,000 at this point. The Dow Jones is close to 30,000. So it's kind of interesting out there to see the bullishness in the current market environment, despite a lot of naysayers out there. You check the temperature on Twitter or other social media places, there are still a lot of people that are fighting this market. They are refusing to participate. They say it should not be going higher. So, that's their decision. I know most people probably have more exposure long than short, so more people than not are cheerleading the market on. But nonetheless, everybody's got to make up their decision what they have to do with their money. Right now, it does appear pretty clear to me that the trends are bullish, but there are certainly worries out there. There's always going to be worries. Remember, there's never going to be a perfect market. There's always going to be negative news headlines in every single daily issue of the USA Today, as an example. If you go back over time, there's always going to be at least one negative news story in the newspaper. So if you're waiting for a perfect day to invest your money, you're going to be waiting forever. And meanwhile, stocks can go on very, very strong runs, and you might be left behind. So you have to keep that in the back of your mind as we watch some of these trends unfold here. But what really impressed me today from a sector perspective here in the United States were the defensive and interest rate sensitive areas. And remember, that's the bottom rung of our charts here on chart 4G. So we got healthcare on the left, we've got staples second to left, utilities third to left, and real estate there in the fourth slot, all at the bottom. And those are all known as defensive and interest rate sensitive areas. In particular, note what is going on here with staples. Holy mackerel. Staples were up 1.24% today. Look at that shot higher out of staples. In fact, consumer staples were the one of the focus areas of my Strategy Lab swing trading class that we talked about today. In fact, one of the stocks that was voted for was a consumer staple. So we were kind of recognizing, this big move intraday on a lot of those names. A number of them were up. I know ConAgra and Kellogg's really had some big moves higher. But I mean, even if you go down the list and look at, Procter & Gamble and Hershey's and, a number of those staples names really kicking into high gear here today. The other area that really burst higher was real estate. As I mentioned before, we were looking at VNQ. This is XLRE. So this is only the REITs in the S&P 500. So that's the difference between it and VNQ. So this is going to be a little bit more of a large cap feel to the REITs. But look at that candle. We close at the highs of the day on XLRE, up 1.44%. The utilities didn't look quite as strong. Not sure what to make out of that. Yes, you finished higher on the utilities, but you'll notice that if I were to right click and maximize the sell there, notice that we did close about halfway in the range of today's candle. So we didn't close at the highs the way that we did with the XLRE. So we'll want to keep our eye on that, but right now maybe a little bit more strength coming out of those real estate stocks there. And then here again is XLP, and this was the one that was up. The staples up 1.24% today. Notice that we broke to new all-time highs on the staples with today's massive up move. And then we also had healthcare making a very strong run here as well. Not over 1% like some of those other areas, but nonetheless a pretty strong showing at 0.85%. And notice the candle, we closed basically at the high of the session, and we did hit a new multi-month high here on XLV as well. So a lot of bullishness coming through right there. As a reminder, over here on the internet, that when you go over to our blog, remember you can click on blog on our website, and you're going to see different things like the posts that we make as far as the market outlook videos and the 9 at 9s and all this fun stuff. You can watch these market outlook videos directly from our website. So I'll show you kind of how that looks when you click into one of those market outlook related blogs. Most of you probably do this already, but there's a few of you that might only be watching it through the YouTube channel itself. But if you wanted to watch it on our website, we do have that posted right here. Also, thank you to everybody who did click like for us there the last time around. So I know it's a holiday week, so not everybody's tuning in right now. So it's a little bit lighter than normal, but I certainly understand why that is the case. So anyway, appreciate all of you that are doing that. And one other reminder, make sure that you're clicking the subscribe button if you haven't done so already. I noticed a number of you did that last night after I asked you to, and that's great. Remember, you can create a free username on our account by just clicking this subscribe area right here. Otherwise, if you come to this blue bar at the top of the website where it says subscribe to the left of my mouse, you can do it there as well. That'll be important in the future because these videos are going to have a slight format change in the future, and if you want the full long version of these videos, you'll want to have a username established on our website ahead of time. So if you've got some spare time on your holiday break to create a user account on our website, we would encourage you to do that. Also tonight I do plan on putting out the sector selector. Normally I do that on Friday nights, but because I'll be taking off out of state here for the weekend starting tomorrow, I won't be able to do it on Friday. So I'm going to do it tonight instead, so be on the lookout for that sector selector post here later tonight for those of you that are premium members as well. All right, let's go ahead and now jump on over to the Paper Money account, and let's do our trade application example here for the day. So I mentioned before, the consumer staples really ripped higher here today. So again, just to give you a quick view of that, that's the consumer staples right there. All-time highs, a big strong candle right there with us closing near the highs of the session. Obviously a bullish posture with that background color in the green right there. You can see that intermediate line curling higher nice and easy. Can also see, by the way, the market sentiment is back to rising. Notice that prior we had that orange line kind of falling out of the upper reversal zone there, but we did get a slight tilt higher here just more recently. So longer term posture bullish on the staples as well. So the one that I wanted to focus on was Mondelez. And that's ticker symbol MDLZ. For those of you that like your Oreos, then this is the stock for you. I'm sure they probably have some holiday themed cookie. It seems like they've done a good job in the innovation department over at Oreos here in recent years, coming out with all different types of limited edition cookies. And so perhaps a few of you will be buying those for your 4th of July holiday parties. But what attracted me to it was not the taste of the Oreos, it was indeed the chart action itself. Notice that MDLZ is now considered to have a bullish posture. Note that the last 3 days it was a bearish posture from an intermediate term perspective. So we now see that green line heading up yet again after this little pullback in price that we had here recently. Not only that, but we did close near the highs of the session for Mondelez, just like we did with XLP. And just like XLP, we hit a new high on Mondelez here as well. So not only on a new high on an intraday basis, but we also had a new closing high here for Mondelez. And so what I thought we would do here today to try to take advantage of what appears to be a strongly trending chart here. Notice how nicely it's bouncing off of these moving average areas and continues to put in higher highs and higher lows. So what I thought we would do here today is what's known as a long call spread, and that is a bullish trade where we're buying one call, but we're not buying it just naked and outright. We're buying it in addition to selling another call with a higher strike price to help finance the cost of that call. Now, the way that we make money off of that is to have that particular stock continue to go up. It is a directional trade, at least the way that we establish them. So remember, this debit spread will be a little bit different than how we conduct our credit spreads, where we don't really need directionality. This is a very directional trade, so if you think Mondelez is going up, perhaps that could be a good trade for you. If you do not think that Mondelez will continue in its uptrend, then it's probably not a trade that you're going to want to pursue yourself. But let's go ahead and come on over here for Paper Money educational purposes to our trade tab. You can see I've got my trade loaded up down below. And what I'm using is the August contracts. Now keep in mind, we are about ready to go into earnings season, so that does throw another wrench into things for some of you. Some of you might have a rule that you're not going to trade options contracts through an earnings announcement. To each their own there. One of the nice things about this is we have defined risk with this particular trade, so it might help us feel a little bit more calm even if we do have to hold the position through an earnings announcement. But you've got to make that decision up for yourself. Nonetheless, we do have a August monthly contract with 44 days left until expiration. Now, the way that we usually set up these debit spreads is we select one strike in the money to buy, one strike out of the money to sell. Right now, Mondelez is trading just a little bit above 55, so the 55 strike would be the at the money strike. Therefore, the first one in the money would be the 52.50. First one out of the money would be the 57.50. So I've got those loaded up down below. Note that I'm buying the 52.50 call in August. I'm selling the 57.50 call in August, and I'm paying $3.11 11 cents out of my pocket to kind of tackle that trade. Now, one thing to note about it is if you were to take that debit amount of $3.11 and add it to the strike price that we're buying, which is 52.5, you'll notice that our break-even price on that trade is 55.61. Note that the stock is already trading at 55.81. So in other words, we get a 20-cent head start on this trade idea if we can get filled there. That's the trick with this being after hours on Wednesday, and with no stock market for us in the United States tomorrow. By Friday prices could be different, so we have to recognize that. But if we do get filled at that price and its stock price remains somewhat close to where it's at right now, we'd get a little bit of a head start on this deal. But the real reason you'd want to take the trade is not the 20 cents of head start. It's the opportunity to make up the rest if you think that Mondelez can go up to 57.50. That's your best case scenario, is if you believe Mondelez can close a little bit above 57.50 in 44 days. Back on the chart, 57.50 is kind of up in this general vicinity in the right-hand corner here, which I don't, with my eye, it doesn't look like it's all that difficult to achieve. But again, earnings could wreck that in a hurry as well. So anyway, we'll go ahead and place that trade, and we'll see if we can get filled first thing on, actually we did just get filled in paper money there. Interesting. Maybe that's an error or a glitch within the Thinkorswim platform. I think the Thinkorswim platform thinks the stock market is still open right now because it doesn't realize it was a holiday shortened session. So technically we actually just got filled in paper money right there. We'll see if that trade could actually get filled in a real money account on Friday when the stock market opens back up again. So interesting. I don't think that's ever happened to me before, but you just never know what to expect, I guess, when you're recording these videos before most of the days of stock market would be over. We closed about 3 hours early here today. So anyway, we'll let that slide there for Thinkorswim, but maybe they'll be able to fix that little glitch in the future if they can set up their paper money platforms on a holiday schedule like their real money platforms. All right, thank you for joining me here tonight. Remember, we head into the holiday all-time highs. Very bullish conditions out there. We were led higher today by some of the more defensive areas of the market, which made it a little bit more of an interesting market than I would have assumed given the headlines. But nonetheless, there are a lot of strong trends out there within the staples, within the REITs, within the utilities. And just because they're traditionally boring doesn't mean they don't offer opportunities. So we're going to take our stab at one of them here in tonight's video with Mondelez. I want to wish you a safe and happy and healthy 4th of July. Go out and celebrate, enjoy yourselves, come back in one piece. We're not going to be here on Friday, even though the stock market will be open, but we'll be back with you on Monday. So with that, have a great weekend, everybody, and happy 4th of July. Bye-bye.